Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about JAMNA Auto, an interesting auto ancillary company. Let's understand whether a bottom has been made and let's understand whether you should invest in the stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about JAMNA Auto, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from now and then. I have put up around 46 podcasts on stocks and markets, so you can have a look at that. If you have a number of questions with regard to a particular set of stocks, then you can directly email me and we can work things out. Now about JAMNA Auto, established in 1954, they are into auto components manufacturing, boast of marquee clients, primarily makes a tapered leaf and parabolic springs for commercial vehicles, have global presence with clients across Europe. Clients include Ashok Leyland, GM, M&M, etc. And the company had done reasonably well from 2014 to 17, but over the last 3 years, the auto industry as a whole has taken a downturn, and JAMNA Auto was not spared either. If you look at the numbers of June, then market cap of the company is 1800 crore. The sales dropped from 420 crores all the way to only 65 crores, and there was a loss of 12 crores versus a profit of 20 crores. Understandably, with respect to the kind of you can say pandemic problems that all companies faced, especially manufacturing businesses, and 45 days of complete shutdown of business took place in the auto space. And if you remember, in April, Maruti sold virtually no cars. So it was a very terrible situation for the auto ancillary businesses, and JAMNA Auto was in trouble as well. But the debt is extremely low of the company, and that's why it's surviving and thriving well now. Margins have shrunk, and it is not due to the pandemic only, but over the last 3 years, the manufacturing sector has taken a beating, and there is very less demand all across the globe. So globally, economy shrunk. Europe was in real trouble, especially you can say southern Europe and parts of Spain and Portugal, etc. And that had a huge toll on the business. So you remember that you need to understand that JAMNA Auto is mainly into CV, commercial vehicles, which is indirectly or directly related to economic situation. If economy does well, then trucks are used even more. So margins shrank, but decent combined promoter and institutional holding with 32% free float is at the moment. So the performance of the stock has fallen sharply since Jan of 2018. As I explained, had fallen 45% during the Feb March fall, has recovered nearly 100% from the lows, and that is the big positive. On a 5-year basis, has done nothing. So currently, the stock is in a situation where it has given virtually no returns on a 5-year basis, and that gives me confidence that the auto and auto ancillary space might be on the verge of coming back in the next 6 months to a year. Results have remained subdued for the last 3-4 quarters, not just for one quarter, and that has led to the decline in the stock. Return ratios are now extremely low compared to what it was, say, 3 to 4 years back. So why there has been a slowdowns? Auto industry under stress since you can say FY18, and that is what I was stressing on, that Europe and US went into a complete downturn. I won't say recession, but a complete downturn from FY18 onwards. Demand from Europe and US has shrunk with respect to manufacturing, whether it is from China or India, and you can say that US is able to export knowledge and export services in a better manner rather than demanding for manufacturing or goods. So goods being asked across the globe, it has shrunk. In India also, people are not quite out there buying everything. Even before the pandemic, they were not doing that. Consumption was taking a hit here in India. Economy has taken a hit here in India. So in the Indian context also, CV sales has not done that well over the last 2 3 years, over the last 8 10 quarters, and that has led to the fall in auto ancillary stocks, which are more primarily focused on providing services to the CV segment. So slow shutdown accelerated the decline which took place. And remember that commercial vehicle segment has been most hit, because if economy doesn't move, if government infrastructure doesn't move quickly, then there is less demand for trucks, because less demand for such products which are used for infrastructure, which are being towed by trucks. So movement of trucks are less. uh, Virtually stalled for 45 days in this shutdown, and projection of further stress in the next 2 years is expected. This has led to the sector being out of favor. I believe next 12 to 18 months could be tough, next 3 4 quarters could be tough. If you look at the technicals of the stock, then major long-term support lies at around 32, and 54 to 56 is a resistance zone. Strong up move expected above, you can say, 56 to 60 levels, not 235 but 56 to 60 levels. The 200 DMA is around 35. Was weak on charts, now at a near 52-week highs. It looks decent, but still it is down 75% from its 2018 high. So you have to remember that before taking any position. So my call on the stock is that hold if you have it. So if you have it, don't sell it. Probably next 2 to 3 years could be good for the auto space, and you could make good amount of money. The stock could surge. If you don't have it, then avoid until you see some green shoots or a movement on the stock. It's better to buy 20 30% above the current price when you're sure about a stock, rather than buying right now and just waiting for the movement to happen and things to change. Cycle should turn around in the next 12 to 15 months. I mean, the signals are ripe that the auto cycle is changing, and probably next 5 6 years could be good. But then that is subsequent to the next 1 year. So next 1 year could be either way, and that is why I am banking on a fall in the automobile sector. I am banking on the fall in the stocks of automobile, especially large automobile like Maruti, etc., and similar fall in the auto ancillary segment. And that's why that would be an opportunity to get into the stocks in the next 1 year and sit on them for the next 4 5 years to make good amount of money. Put only 5% of your total investment, keep that in mind, and remember that it is basically a 5 to 6 year play in which there is no immediate reward, and the next 1 year could be extremely tough for you if you get into investment here. So this was my video on Jamna Auto. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.